Hey traders, welcome to our Q&A show that has yet to be titled. We're going live on a Sunday as we're getting the open in Asia. So at 6 p.m. the futures open, and we're going to see an early look at what's going on with the Asian session. And based on the way that there was a late day rally on Friday, there's an old saying, don't fade Fridays. I don't like to fade any day, but most especially Fridays. Now, what's a fade? A fade would be shorting into that strength going into Friday. A fade would be saying, well, this thing's gone as far as it's going to go. That might very well be true, but if I were to be setting up a long put trade or some sort of exhaustion after a sell-off or some sort of exhaustion after a rally, I would do so on a Monday, likely sometime between 9:45 and say 10:15. But you can see here we're getting a nice follow through after the rally off the lows, right? And these kind of sucker punches to the upside and downside have been really common, where it looks like, hey, things are going to stay pretty bullish, we get a sell-off. Things are going to look really bearish, we get a rally. And this really is an environment where shortening the time frame on trades, meaning setting up, say, 1 hour swing trades or setting up, say, daily time frame swing trades, but with optional targets, is going to be a really good idea because it allows us to pay ourselves sooner. And by pay ourselves sooner, it's not just about taking something off the table for me. That first target in my trading approach is the first step to risk management. And for those of you that have been in the Sector Secrets Mastery, you know that's exactly right. And taken any of my classes, like the one we have going on right now for the immersion, you know that there's a philosophy I have of when that first target is reached, it should not be because we've hit a brand new high and some sort of thing that hasn't happened yet. A lot of traders base their exits on things that are necessary to happen that haven't happened yet. I would never have an initial target that requires a new high or a new low. How about sticking within the range of where price has been willing to go, pay myself while I can, not when I have to, and then I'll get much more ambitious with the second target. In fact, if anything, here's one thing to kind of turn on its head. Instead of being really ambitious with a first target, maybe it's something like, I don't know, 100% return on premium paid or some such thing. How about letting that first target be where we're prudent about taking something off the table? And then that second target is where we really want to go for the bigger gain, because now we've done our job. Maybe it's scaling out, moving to break even, things like that. And now we're in a better position to manage the risk while adding something to the account. And that's definitely the philosophy. If this particular move can persist, that would be great. And we'll likely see that follow through into Monday morning. Who knows? But this is a good start in terms of reminding ourselves not to fade Fridays. All right, next up is one of the names that's on the watch list. By the way, if you had not checked out the free video, and it's an unusual free video that I did on Friday, rather than talk about what I think is going to happen, rather than even worse, talking about what has already happened, I thought, let me go into a discussion. I'm going to YouTube here. I think I misspelled it. Let's see, YouTube, simpler trading. All right, so rather than going into hypothesizing about what could happen, or even talking about what did already happen, what I thought would be a really interesting discussion, and you all tell me if it's helpful or not, but you can check it out at the Simpler Trading YouTube channel, probably the channel that you all are at right now. I thought, you know what, let me give everyone a look at the kind of trades that we're taking, but more than that, how do we set up trades after we get a setup? Now that setup might be something you've discovered on your own, and now you're thinking, well, it hasn't set up while I'm in front of the computer. What do I do then? How do I set up my trading life so I'm not glued to the screens for the entirety of the day? And gang, the day is getting a lot more interesting because we already know that the very earliest maybe stages of potentially 24-hour equities trading is starting to emerge. And while the liquidity is probably not really there in any meaningful way yet, fast forward 12 months, 18 months, 24 months, and all of a sudden we might be managing not just 9:30 to 4. We might be managing 7 to 6 p.m. Eastern. We might be managing 2 a.m. to whatever it may be. So more so than ever, having an approach where once we find a trade idea, we can have our trading partner. Now, who's our trading partner? Who do I consider my trading partner to be? I consider my trading partner to be my charting platform, whether that's Thinkorswim, whether that's TradingView. And all of these charting platforms have the ability to place an alert. And by placing an alert, it's going to be basically babysitting this trade idea that I have. Even more detailed that I want to get in, I wanted to walk through with traders what we've got open and what we did on Friday with that in mind. How do you manage your trading life in a realistic way? Right. And look, I'm the first one who's going to tell you, gang, is trading easy? No. Is trading doable? Absolutely. Is trading something where we kind of take a Ron Popeil, set it and forget it, like we're cooking a rotisserie chicken? Definitely not. But what we can do is use modern day technology to automate our charts, find levels that aren't as emotionally and headline driven and FOMO and whatever else news driven. Just say, hey, is the criteria that I need happening? And if it is, what do I want to do about it? How do I find targets? How do I manage risk? And that's exactly what I got into in this rather beefy video, walking everyone through just the trades that we had taken on Friday. And more so than, it being a conversation about what has happened, how in the future can you set yourself up to be a self-directed trader and not be under the delusion that somehow, we're just going to buy something and walk away, or worse, you're waiting on an alert from me. You might say, Rog, isn't that kind of what you do in the room? Absolutely not, right? We look at creating an environment where traders are learning to direct their own order flow. Because at the end of the day, no one cares more about your money than you do. So I gave a very realistic plan for traders who want to do this, but kind of like if you're a new golfer or if you like to go fishing, you get a golf pro to take you around the course. If you're fishing, you say, hey, you know what? I'm going to get a guide. The guide knows, where the fish are, what those hot spots are, depending on the time of year, depending on the time of day. They're going to motor me out to that part of the water. They're going to tell me what they usually cast to catch those fish and tell me where to cast. But at the end of the day, I'm the one that casts. When I've had a fishing guide in the past, they do everything but put the lure on the line for me, although sometimes they'll even do that. But I've got to be the one to cast it. I've got to be the one to reel it in. Gang, that's trading. No one can do that for you. And so the more that you are self-reliant and understand what's going on, the better off you're going to be. All right. So that said, let's take a look at bonds. So here's how I would present bonds to folks in my Sector Secrets Mastery. We take a look at the uptrend that confirmed on the 27th of February. We'd see that in that time, both the 28th and now here as we open up the first trading day of March, that trend has kept the structure. Number two, all right, we got the structure. Structure dictates strategy. Now what? Now I want a green candle in the gray zone. And every morning I can identify the value of the gray zone and I can set up a trade. And if it doesn't trigger that day, I'll do the same thing the next day. And the next day, this will likely be a setup. If we can get a little bit of weakness, that I would love to take advantage of going into tomorrow. All right, here's another setup that we were taking advantage of last week. It's actually the only remaining trade that I have at the moment that has not hit the first target scale out. So we had a number of entries on Friday, whether that was healthcare, Johnson & Johnson, Staples. There were a number of trades that we took, and most of them hit at least that first target that we talked about earlier. And by hitting that target, I go through a bit of paying myself when I can, not when I have to, but a whole series of risk management decisions. And XLU is still a trade that I would consider to be in harm's way. What that means is XLU has not been scaled out of yet. So if it does hit the first target, great. I can make all those adjustments to skew the risk reward in my favor. But until it does, this is still risk to my capital. This is still risk to my money in my account and anyone else who's taken the trade. So that first step of the first target is a huge one. And with any with any good fortune. And if I'm not going to fade Fridays, I mean, look at the way utilities surged into the close. They were very, very strong, lingering up by the highs. I would love to see just a little bit of a nudge. I think we're maybe 40 or 60 cents from that first target. Would love to see that first nudge to at least give us a choice to scale out of this trade. And by the way, if you're a Sector Secrets Mastery member, you get the alert out. So I'm actually going to see, I haven't turned on my Simpler Trading mobile app here. And hang on one second, let me take a peek. I haven't done this yet today. So I'm going to go to the alerts and let's see. And on Friday, I sent out this XLU trade idea. And let's see. And I'm going to read to you exactly what it says. I won't be able to show it to you, although you might be able to see it. I don't know. I don't know how realistic that is to actually read. But what the idea was is obviously, I shouldn't say obviously, waiting for price to hit a certain trigger. And we were buying the 21 March 78 or 77 call. I give traders a little bit of choice if they're both reasonable. And I bought the 77 calls. All right, now I'm going to look for an optional T1 at 79.40, right? And then my first target is 79.80. So I'm looking at those two levels, but I've given traders the choice. They think, Rag, we might hit that right on the open. And we were right there throughout the, and I don't mean after 4 p.m., gang. I mean, up until 4 p.m., we were right there. Would love to see a move at least to 79.40 on the morning. That gives traders an opportunity to scale out, right? If we hit 79.80, we will all be scaling out for sure. And those are the kind of things that we look for. So yeah, Jeff, I have two levels, they're all in the alerts. And yes, we have a 79.40 optional and a 79.80 first target. That first target is non-negotiable. If I had not taken an optional, I've got to scale out at that level because lingering too far past an initial target puts my capital at risk, because not until I scale out at that first optional or first target am I doing all those risk management steps to protect the downside. So those are all things that I think don't get discussed enough when we're in a trading room, following other traders, or even when we're building our own trades. This is not about a new indicator. This is not about a new strategy. It's about how am I getting into a trade and setting up my trading life in such a way that I can manage these decisions in real time and on my own with a little bit of help from your fishing guide. All right, Ari asked, do I have any automated tools to execute futures trades through companies like Interactive Brokers? To execute the trade, I don't do automatic execute. Ari, yeah, I don't believe in letting the computer execute trades for me. So I'm not really familiar. That's not how I like to trade. So for example, execute S&P and NASDAQ futures all automatically. I don't do it. I don't believe in it. Not a fan. I do love, however, Ari, I love that you asked about automation. I do love the idea of automating my signals. I do love the idea of automating my zones. And then what that does is it allows me to place an alert on my phone to let me know that I might need to buy the SPY, or as you mentioned, the ES. I might need to buy the NQ or the QQQ. But I'm not gonna do automated. I wish trading were that easy. Right. I know everyone wants this kind of, and I get it. I was there once upon a time too. Oh, well, let me just run this computer and the computer's going to find its signals and get me in and get me out. Gang, I wish trading were that easy. Are there people who've done that? Sure. You've got Renaissance Technologies, but this is, run by a math genius, constantly tweaked and monitored by other math geniuses. They're not under the delusion that any of trading is a Ron Popeil rotisserie chicken world of set it and forget it. I wish, right? But thank you for the question. I think a lot of people are curious, to what degree can we automate our trading? My goal is to automate just about everything but the execution, right? But here's what I will say, Ari, because I can automate my zones, because I can see where I want to get in when it comes to futures trading, or if you're buying shares of stocks or ETFs, you can put a limit order in. You can put a stop order in, depending on the style of entry, whether it's a exhaustion buy at support, or whether it's a more momentum buy through resistance. The first would be the limit order, the latter would be the stop order to get you in. So if you're talking about futures and you can automate your zones, you can then place conditional orders. You have, depending on the degree to which you want to automate your idea, You can use OCO orders. You can use if-then orders. So there's a lot of choices, especially on the futures side, my friend. Yeah, so I believe in automating zones. Believe in finding ways to automate decisions about structure, support, resistance. But at the end of the day, I'm still going to be the one pushing the buttons. Right? I've never gone into automated trading, and I just have yet to see something that really works for me. All right. Next up is taking a look at. Let's talk a little bit about Johnson & Johnson and XLU and other trades that we're in. So we've scaled out of these trades. Scale out. It's not the same as closing the trade. So let's talk a little bit of a lingo game here. Triggers are price levels where I have to make a decision. A trigger could be a stop loss. A trigger could be a first target. A trigger, of course, could be an entry. So until that trigger is reached, there's nothing to do, right? Okay. The second part of it is scaling in and scaling out. So I'm always going to know all the levels, and I'm always going to share with traders, if I send out an alert, all the levels at which I'm going to be getting into the trade. This is not an after the fact, hours later, days later, oh yeah, let's add to this loser. Losers add to losers, period. So what I want to remember is that's not a smart risk management approach, right? It's a great way to, we call adding ADD, an acronym for actually delusional and denial. I could be wrong on a trade. I'd rather take a tiny loss than continue to add, build a bigger position, and then absolutely whack-a-mole my account with finally a loss. I don't mind taking small losses. In fact, up until Friday, where I think we went 3 for 4. If XLU hits, I think we'll be 4 for 4 or 4 for 5 or 5 for 5. I'm trying to remember what we did. It's, in terms of what trades we have open before those relatively active Friday. But nonetheless, the idea of taking small losses means that I understand that by keeping my losses small, when I do have a winner, I can overcome those negatives in the account and continue to grow the account, right? So if we take large losses, then we need a very high win rate, and that's usually unsustainable. If we take small losses and reasonable gains, we don't need as high a win rate. So the only conversation that matters in the beginning is what is the average size of a loss and what is the average size of the gain. In a world where everybody wants to talk about 200% and 300% winners, what I always hear absent is, well, what's the average size of the loss? And I promise you, they're going to be 50, 60, 100% or max debit, because that's the way most options traders operate in the world of options trading. That is an unsustainable tact, and it certainly won't lead to consistent account growth. And it's basic math, right? It's basic math. If I risk 25% of premium paid, and I look to even just get 25% of premium paid, right? I can hold steady at a 50% win rate as long as those are sort of the scales of wins and losses. What if I tweak it by a little bit? I risk 25%, but I look for 50% return on premium. Now I only need a 33% win rate. Now imagine if you're operating like we typically do at about 60 to 70% win rate. Now you can see where the math just inevitably helps us grow an account. And it's really that kind of boring but amazing arithmetic around consistent account growth that I hope everyone can start to wrap their heads around and get away from home run hitting and get away from, I need 400% wins or 100% wins. I don't even need that kind of level of win, because if the risk reward ratios are correct and not upside down, you don't need big wins to overcome losses. And it doesn't need to be so hard, right? Okay. So that was the question on automation and the question on optional targets. Let's see. Daniel's asking, how much does it cost to buy a contract of S&P Mini? Yeah, check with your broker, Daniel. And there's two versions of that. One, are you looking to swing trade or overnight trade at S&P? You'll need overnight margin, which is a higher amount. If you're looking to day trade the S&P, it's usually a fraction of that. So it depends on whether or not you want to take the trade overnight, or if it's just going to be a day trade, and your broker might have. Now there's minimum set by the exchanges, but brokers will vary quite a bit from, in terms of their day trading margin and their overnight margin. And that's called, there'll be two numbers you'll need. If you're day trading, ask them about their day trading margin. If you're taking it overnight, ask them about their initial margin and their maintenance margin. And that'll give you the numbers you need to have in your account. And if the trade goes against you, how far it can go before you get the potentially dreaded margin call. All right, gang. So as always, thank you so much for joining us for our unnamed Q&A with Raghee show. I'll figure out a name eventually, but thanks as always for being here. Thanks for the questions. Check out that video. That's at the Simpler Trading YouTube channel, because this walks through a huge amount of detail of not just how I think about setups, but how I share these setups in a realistic manner with our members, how we can think about setups in a proactive way so you're not knee-jerking into, oh, Raghee got in, oh, Raghee got out after the fact. My goal is to give everyone the information they need to make their own decision, because at the end of the day, it is your decision to take a trade or not to take a trade. But you also have to understand, hey, what's this going to cost me? If I'm wrong, how much will I lose in my account? How many contracts should I trade? There are formulas to all of that, but you need a little bit of time to sort those things out. And really what we're building in the Sector Secrets Mastery are a team of traders who love the community, but they're self-directed, right? They're making decisions about trading ideas, because again, I love that idea of the fisherman and the fisher person, right? I like to fish, and having a guide, right? Having someone take you out and say, I fished these waters before. This is where you got to cast, but I got to still do the work. And that's the fun part. I wouldn't want someone to do the fishing for me, but I sure would like a hand to know where the fish are. All right, gang. As always, thanks so much for being here. And I don't believe there'll be a Charts and Coffee tomorrow, but I will see you all in the next show, likely on Tuesday at 9 a.m. And so, like I said, maybe tomorrow, check out a peek behind the curtain. And this is me, sharing with you all a lot of the detail of what we do in the mastery, because I really want you all to understand the process, make sure that what we're doing in the room might be something that could help you out. Enjoy the rest of your Sunday. Be good to each other. I'll see you soon.